Okay, before we start the video, I want to just talk about one of our sponsors, Max Wright. He's actually putting together a webinar training which is going to teach you how to invest $5,000 wisely today that can give you a passive income of $100,000 per year or more in as little as 18 months. So this is an invitation-only webinar that he will be sharing all of this info with you. I'll put a link to the webinar underneath this video, as well as it's go.doubleclick.com/MaxWright. Max has been calling different Bitcoin cycles for the last 6 or 7 years. I've personally known him for about 13 years now, since I was about 20 years old. I'm 33 now. And he's a solid guy. He's super knowledgeable. He's got great insights into the cryptocurrency market, and he's really in this for the long term. He's also a great person to find different ways to make money both online and offline. So I'd strongly recommend sign up to this webinar, take the time, watch it. You will get massive amounts of value from Max. And for those of you who've been watching some of the videos previously, you would have seen his insights into BTC and why he feels like this is going to be at least $100,000 BTC in the next 12 to 18 months. So go ahead, register now, and let me know in the comments what you thought of the webinar. Welcome to today's video. Hey ladies and gentlemen, wherever you're tuning in to watch this video, I hope that you're enjoying the bull run that has officially started with this price action of 20,000 plus BTC. As I'm making this video right now, the price of BTC is actually $23,153, which is phenomenal. And ETH is around the $660 USD mark. In today's video, I'm going to talk about hyperinflation. And for those of you who don't know this, Bitcoin is actually a deflationary coin or cryptocurrency, whereas normal fiat currencies like the AUD, the USD, and all the different currencies around the world are an inflationary currency. What does this mean? So inflationary currencies are controlled by a central bank, which then prints money on demand based on GDP and how a country is doing, whether it's good or bad. So in a situation when there's a recession or a global pandemic, which we've experienced this year, you will see printing happening at a rate that is astronomical. With the US dollar being printed in the last 12 months, I think about 70% of the total money supply has been printed versus the last 5 years, which is just phenomenal to think about. So that's essentially what inflation means. And you see there's lots of different examples that I go into where in Venezuela, where it's actually the dollar is so devalued to the point of, or it was useful to a point, and now it's lost 99.99% of its value. And those who own that currency are getting more value from literally folding and making those notes into arts and craft and then selling those items to tourists in the area, which is just phenomenal, which I'll put some photos of that on the screen so you can see that for yourself. When the value of the dollar is so low that the paper that it's printed on is the only value that it has, is when governments inflate the currency so much so that it is completely useless or worthless. You'll also see examples where people have like massive bags of money in order to buy a loaf of bread in Venezuela because the hyperinflation has just been skyrocketing through the roof. So what does hyperinflation actually mean? So a good friend of mine, Nathan Birch, who if you're not subscribed to his channel, I'll put a link to his channel below this video, as well as the video that I'm referencing. And he explains hyperinflation as in a single day, you might go to a shop to go and buy a loaf of bread for $10. And then an hour later, you go there and it's $20. And then 3 hours later, you might go there and it's $30. Hyperinflation is when inflation happens so quickly that you are literally paying triple or quadruple for the usual goods and services that you would normally pay for. And the beauty of, and he's a big believer in debt is good. Debt is a good thing to have if you have investments around that debt, because you are essentially paying for future you're locking in the price of an asset in the past and paying it off with future inflated earnings. So you might buy a house for $100,000, or an apartment, I should say, Good luck buying a house or an apartment in Australia for $100,000, but in other parts of the world you could do that. You're locking in that debt at $100,000, then you're paying it off with future inflated earnings. Now, you'll see in many countries like the United States, the earnings isn't going up nearly as much as the cost of living or cost of goods and services is going up, but you will see that money supply is more and more rampant in those areas. So why is debt good? Well, debt means that you can, like in 10 years time, you're going to be hopefully earning double the income that you are earning right now. Rents are going to go up with the earnings as the cost of living and the cost of being able to pay rent is going to go up gradually with the whole market. So hyperinflation is a great thing if you are invested in assets, and especially if you're invested in something like Bitcoin or other cryptocurrencies. The fact that the Federal Reserve of the United States, as well as central banks all around the world, are printing money, it excites me. It excites me so much because I own property, I own businesses, and I also own cryptocurrency. And you can already see just in this, I can only speak from my observations in Australia domestically, you can see inflation already starting to happen in markets like the used car market, as well as car parts, which, as you know, that I'm a big fan of racing. You've got one of my cars here, a couple of other cars I've owned over the years behind me. And I'm already seeing that car right there, if you were to buy something like that, a Nissan Silvia S15, 12 to 18 months ago, you'd be able to buy something manual for between $12 and $18 to $20,000 for something that's reasonable. The lower market's pretty average, a lot of wear and tear and a bit of paint fade. On the higher side, the $18 to $20,000, you need something more nice that's looked after, lower kilometers. Now, those exact same car and manual, because the manual is a desired car in that category. Now, if you look on Facebook Marketplace, on Gumtree, on car sales, that exact same car right there, which had a sticker price in 2002 when it was first released of about $36,000, $38,000, is selling automatic for between $32,000 and $36,000 just in 12 to 18 months. Whereas the manual cars, the clean example, paintwork, bodywork's really nice, interior is really good, low kilometers, manual is selling for $40,000 plus in just 12 to 18 months. Because there's the people that are buying cars, or these type of cars, I should say, are getting all the different ejections from their super. Super's just like an IRA in the United States. It's for your retirement. People in Australia have got an ejection of $10,000, not once but twice in the last 12 months to help with COVID. COVID assistance, as well as in Australia we have a government handout called JobKeeper as well as Job Seeker, where a lot of people who were working aren't able to work are now sitting at home watching Netflix and getting paid just as much, if not more, than they were before this whole pandemic thing happened. Now, that's not to say that you might be on JobKeeper and you're still working just as hard as everyone else. I'm not singling anyone out. I'm not saying that everyone's doing that. I'm just saying that that is what is happening in some cases and not in all. So you're seeing all of these inflationary situations happen. You're seeing the cost of living going up. You're seeing the cost of goods and services go up as people are starting to open back up. And as I said in the previous videos, that one of two things are going to happen in Australia. Next year in March, the Job Seeker and JobKeeper payments will cease completely, and they won't be there at all. People will still be out of work. People will still be looking for work, and there'll still be a majority of people that are working. Now, the scary part about that is one of two things are going to happen. On one side, that JobKeeper, Job Seeker benefit, I believe, will continue because the government will start to see potential panic and or significant pullback and contraction in the economy. Whereas right now it's very stimulated. There's lots of money being spent on lots of things that people don't need, like the $1,400 or $1,500 PlayStation 5, which I've put on the screen right now, which is what they're selling for in Australia when they're released 1, 2, 3 weeks ago, and they're only selling for $750. So people are already, trying to make money there and inflating goods and services because they're scarce. You can't buy them in stores here in Australia. So that's one thing that's going to happen. The other thing that could happen is that the government stimuluses here in Australia will stop, and then people will either fire sale in their business. They'll be doing special offers where people are getting half off or saving a bunch of money in order to go and start providing their services, giving all kinds of discounts to get people through the door. Or the other option is once they do that and they find that they can't really sustain that, they're just going to start jacking their prices up. So goods and services like getting your hair cut or going to the bar or whatnot is starting to go and go up and up and up and up. So there's a lot of things going on. There's a lot of potential for this cryptocurrency market and other investments if you're invested in property or traditional businesses. By having these investments, you are essentially hedging against inflation. And that's why I'm super excited about this for Bitcoin. Bitcoin is sitting at the $23,000 USD mark right now. It's just hovering there. It's getting support, which is really good to see. And does it have a potential to pull back? Absolutely. But it is holding strong. So what I'm going to do now is I'm going to jump into a couple of different graphs and talk a little bit about Venezuela as well as Argentina, where hyperinflation has already hit and some of the effects that they've experienced from that. And then we've got a word from our sponsors. So we'll jump into the screen now. Earning money and preserving its value are two entirely different things. Traditional currencies, be it the US dollar, euro, yen, or pound, or AUD even, are all inflationary in nature, and due to the fact that the central banks can print them at will, this means that fiat money is losing value every day as its purchasing power is reduced. Inflation is typically countered by investment, and the goal with any investment is to make a return which is more than the going rate of inflation. While inflation is part of economic design, in some cases external and internal forces greatly accelerate inflation, causing what is known as hyperinflation, which can render fiat currencies virtually useless, as has been the case in Zimbabwe as well as Venezuela. Traditional hedges against inflation. One of the most common hedges against inflation is gold due to its limited supply and scarcity. Even though gold is not an ideal investment, it does retain value better than fiat currencies and is fairly tradable. During times of economic crises, most people pull their wealth out of fiat currencies and put into precious metals to preserve its value, at least until the economy recovers. The question is whether Bitcoin, which was designed by Satoshi Nakamoto shortly after the 2008 economic meltdown, can serve as an effective hedge against inflation and hyperinflation. Bitcoin as a hedge against inflation. So Bitcoin shares many of the characteristics of gold, and most notably that is scarce and limited resources. There can only ever be 21 million Bitcoins in existence, and not a single coin can be created arbitrarily. This makes Bitcoin a deflationary currency and theoretically increasing its purchasing power every day. And as you've seen in previous videos, I've gone and looked at on-chain analysis, and although there's only 18 million BTC already mined, there is closer to 6.5 million actually in circulation. In other videos, I showed that there is less than 800,000 BTC addresses with one or more Bitcoin in them globally. Bitcoin also has key advantages over gold. So number one, it can be held, moved, and managed easily and cost effectively. Number two, it can be traded or exchanged almost instantly. And number three, it virtually crosses all physical and geographical boundaries. It can be spent effortlessly in daily use. However, Bitcoin's volatility is a major factor which cannot be ignored and takes away from its hedge against inflation. During the start of 2017, one BTC was worth $1,000, and by December 2017, it was worth nearly $20,000, only to drop around to $3,500 by the end of 2018. And today, in December of 2020, Bitcoin is trading at between $22,500 and $23,000 US. This price action clearly shows Bitcoin's price instability and makes it unsuitable as a reliable store of value or hedge against regular inflation. But can Bitcoin help economies facing hyperinflation? Absolutely. Countries facing hyperinflation place several restrictions on citizens and their wealth. Often their ability to purchase other currencies such as the US dollar is legally limited, and they are not allowed to move wealth abroad either. In such scenarios, locals have no option but to see their wealth diminish daily as they lose purchasing power to buy even the necessities of life like food, water, and medicine. Even though Bitcoin is not the most reliable store of wealth or hedge against inflation, it is in these countries with hyperinflation where it really shines. As long as there is internet access, people are able to own and move Bitcoins across borders and preserve their wealth to a much greater extent by purchasing and holding Bitcoin and other major cryptocurrencies. The inherent properties of cryptocurrencies can certainly help combat hyperinflation, and cell phone penetration, even in poor and displaced populations, can be high, making crypto an especially useful solution. Initiatives by the crypto community have popped up to use this opportunity to help. For example, GiveCrypto.org, a non-profit started by Brian Armstrong, the co-founder of Coinbase, has raised over $4 million and is currently working to create ambassador networks to distribute donated cryptocurrency primarily in Venezuela. So today, people in Venezuela or Argentina can easily buy Bitcoins with their savings and hold them securely for future use. Even though they'll be taking a chance on Bitcoin's inherent volatility, that risk is much less than the one they face at home, where their local currency may eventually be regulated to making arts and crafts, which you'll see on the screen right now. This utility and the consequent high demand is one of the reasons why Bitcoin and other cryptocurrencies are sold at a premium in countries facing economic turmoil, such as Venezuela and more recently Argentina. Bitcoin was originally designed to become a medium of exchange and store of value which operates beyond the purview of governments and economic policymakers. Today it serves this purpose to fair extent, if not ideally. Moving forward, Bitcoin's scarcity almost guarantees value appreciation, but it remains to be seen how network and digital assets itself matures over incoming decades, especially since the last Bitcoin is expected to be mined somewhere in the year 2150. So let me give you some examples of countries turning to crypto. So here's some recent examples that people are rallying behind crypto, specifically in places suffering from hyperinflation. So Argentina has reportedly suffered from hyperinflation. Apparently it doesn't matter who's in charge of the government, they always seem to spend more than they have. And as recently as March 2019, their inflation rate has been around 34%. Venezuela, local people have been experiencing dramatic hyperinflation on necessities and simultaneously are demanding Bitcoin Cash at unbelievable rates. Venezuela's inflation rate is projected to hit 10 million% in 2019. Turkey, the local lira has been on the decline for some time against a host of other fiat currencies, and during this decline, Turkish people and residents of Turkey are turning to Bitcoin as Turkey's inflation rate is around 20%. So also in Venezuela, the Venezuelan national currency, the Venezuelan bolivia, depreciated by more than 1,000% to the US dollar in less than a year. And this inflation rate is skyrocketing and has helped non-traditional investment tools to take center stage like cryptocurrency. So presently, crypto adoption in Venezuela is booming, and according to the latest report, and there are more than 20,000 businesses in Venezuela accepting crypto as a mode of payment, including a Burger King branch in the capital city of Caracas. Hyperinflation makes it difficult for local shops and merchants to store the Venezuelan bolivia, thus making cryptocurrencies a much more stable medium of exchange. And the data from Local Bitcoins, which is a peer-to-peer Bitcoin marketplace, shows that the trading volume in Bitcoin in Venezuela has reached an all-time high in July of 2020. When you think about it, having Bitcoin as the stable coin against your local currency, given the volatility that is there, it's really crazy to think what they must be going through. Then we've got Argentina. So Argentina suffered from a high inflation rate of 53% through the use of weak economic policies, political turmoil, and default debts, which have accelerated the currency's depreciation. The Argentinian peso, the national currency of this nation, lost more than 50% of its value in 1 year. This weak peso is aiding crypto adoptions within the country, and Buenos Aires, the capital of Argentina and the most visited city in South America, is not just another tourist hotspot, it is gradually becoming Bitcoin's hotspot since more than 100 merchants in this city now accept Bitcoin. And in fact, there are 11 Bitcoin ATMs in this city, and the Bitcoin trading volume in Argentina has reached a record high in the month of July 2020. As stated, inflation has played a major role in the crypto adoption, and most of the countries suffered from rapid inflation reported higher trading volumes in Bitcoin and other cryptocurrencies. Also, depreciation of the national currency has encouraged investors and even small businesses to store value in cryptocurrency assets in order to hedge against the devaluation of their local currency. The growing population of crypto assets during these difficult times shows a roadmap to an even greater adoption in the future. So how can crypto help? There is a reason why people who reside in totalitarian countries suffering from hyperinflation quickly turn to crypto and open a Bitcoin wallet with services such as Crypto.com or many other online wallet providers. And one is the privacy factor. Just as those who on the dark web wanted to conceal their activities from the government, when the government becomes corrupt, even law-abiding citizens find it necessary to turn to black market activities in order to survive. In Venezuela, for example, the price-controlled shelves are empty with necessities like bread, toilet paper, and milk. But if you have another currency like US dollars or crypto, shopkeepers magically find a supply of goods to sell you. So one advantage of crypto is that it's more easily concealed than dollars, and the transactions are handled electronically. Cryptocurrency offers an escape like foreign currency does in these moments, and when economic turmoil occurs, citizens can start buying crypto to store their savings and protect their money. It becomes a borderless currency that they can count on in times of inflation. One of the concerns of crypto, voiced by many, is its volatility. As a new medium of exchange, it has been a very difficult time to market to rightly assess its value, and that combined with speculation has resulted in excessive exuberance causing high volatility, and hopefully as cryptocurrency matures that volatility will calm down. In the meantime, people with guaranteed losses in their home currency are willing to take a chance that crypto will be much more stable than their local fiat currency. So the key takeaways here, the 5 key takeaways here that sum up the understanding of hyperinflation is: number 1, when prices soar over 50% in 1 month, the economy is starting to experience hyperinflation. Number 2, this is often caused by government that prints more money than its nation's GDP can support. Number 3, hyperinflation tends to occur during a period of economic turmoil or depression. Number 4, demand pull inflation can also cause hyperinflation. Soaring prices cause people to hoard, creating a rapid rise in demand, chasing too few goods. The hoarding may create shortages, aggravating the rate of inflation. And number 5, currencies that have suffered horrendous inflation rates are Germany, Venezuela, Zimbabwe, and the United States during the Civil War. Venezuela is still trying to cope with hyperinflation to this present day. Okay, so I hope you've got a deeper understanding on Argentina, how it all works, as well as Venezuela. You can start to see how it's scary it can be if you are in a country that has the central bank just printing like crazy. I will say that in Australia, in the United States, in first world countries, we do have a lot of systems and policies and procedures in place to protect against that kind of thing happening. But can it still happen here? Absolutely it can. And you'll see that a lot of people have talked about how the dollar only lasts a certain amount of years before it has to be reset again. And I think it's 30 or 35 years. A dollar cannot last any longer than that before it has to be recreated or re-engaged in a different form in order to continue to have it flowing. So that's a little bit about that. One of the beauties of the cryptocurrency market going up is you can still buy cryptocurrency using borrowed earnings. So I've been talking about one of our sponsors for a number of weeks now, BlockFi. I personally just use the platform and I'm finding it really, really easy to use, and the approvals were almost instant. It took about 5 hours to get the funds. And what I'm doing with that is I'm using the borrowed funds to then buy more cryptocurrencies and have more exposure, while at the same time not having to sell my crypto. And I'm going to keep doing this. I'm going to keep trickling it down. But at the same time, I have my own risk strategies. I also understand how much I am preparing to risk. And I also have enough collateral to top those loans up if the price of BTC does go back down, so that I don't get margin called. If you want to jump in and see a little bit more about BlockFi, I'm going to put some video on the screen right now that you can have a look at. You've got the ability to put your crypto to work with BlockFi and earn up to 8.6% per annum with your interest account. Now, if you sign up today, you get up to a $250 crypto bonus with a deposit of $25 or more. This is really cool. If you're wanting to earn some interest on your cryptocurrency or just get some more crypto, this is a great way to do this. I also mentioned if you are looking to borrow against your cryptocurrency, they allow you to do that. They charge you a very low interest rate of 4.5%. They will lend up to 50% of your cryptocurrency. So if you've got $10,000, they will lend you up to $5,000 at a 4.5% interest rate, which is essentially in Australia what you are paying for a mortgage for a house, which is just absolutely crazy. And the loan is for 12 months. They're also backed by some of the biggest names in cryptocurrency: Morgan Creek Capital Management, Coinbase Ventures, Galaxy Digital, the Winklevoss Capital, and a few other ones that I can't pronounce. Okay, so that's another video from me. I've really enjoyed making this video for you. I'm so excited for all my customers, friends, family, everybody that's bought cryptocurrency as well as Bitcoin. They're starting to see returns. I just posted on my Facebook today that BTC has done a almost six times return in just the last 12 months alone, with BTC being as low as $3,800 for the year and as high as 23,500 as of today and yesterday, which is really, really crazy. I'm super excited to see where we're going to go from here and see all the possibilities as crypto money flow starts to move out of BTC and into other alts. And in tomorrow's video, I'm actually going to talk in depth about the crypto money flow cycle. So how it all moves between BTC and all the different alts, because that's one of the requests that I've been getting in different videos about that one. So as always, like, subscribe, share, give me a thumbs up. I really appreciate all of you that are doing that, as well as leave a comment or a question below. If there's any topics that you want me to talk about in videos, I'm more than happy to make videos for you guys. Please just let me know below. If you're not comfortable writing on the video and you want to send me a private message, that's okay too. Feel free to shoot me a private message on Facebook or Instagram. That's it from me. I'll see you in tomorrow's video. Take care.